Let's head to Manishi. Manishi, now what to do? The currency is eclipsing the equity market action. But back to the central point, if you see the market, equities this morning or currency, markets are not paying too much heed to this phone call. And I think markets want to see something far more concrete, which is what they've missed all through this year. Now, what is your sense? I mean, are there enough risks to the upside, or should I say, risks to the downside view? We all are waiting for the turnaround in earnings. We all are waiting for that trade deal. But how's it looking as we enter the new year?
Right. Thank you very much for having me. It's a good day to be here, in a sense. So, the point that you made about this phone call about the trade deal not having the desired impact, I think that's partly because this has been talked about, this has been well telegraphed over the past 2 months almost. The market has been waiting for the trade deal to come through. If you look at the basic variables which influence an equity market, earnings, currency, and interest rate, only one of them, the interest rate, has been in its favor over the last, few months or so. We are still waiting for the currency to stabilize. We are still waiting for earnings estimates to move up. And even the worst part is that in both these parameters, for earnings and currency, rest of Asia, particularly the North Asian markets, are doing way better. Asian earnings estimates are showing an uptick. There's an upward inflection led by the North Asian markets. We are seeing Indian currency being the worst performing, but much of Asian currencies haven't done that badly. Many of them are actually up. So that comparison is actually becoming stark in the minds of the FIIs, and that is reflected in what they're doing in India.
Yeah, no, absolutely.
Continuous selling over the past few months.
Absolutely. It's becoming more and more difficult, I guess. I mean, from an institutional equity sales team perspective as well, I can just imagine, how to sell the India story, where you have tax eating into your return, you have now the rupee depreciation eating into your return. So it's tough out there. On that point of North Asia doing well, Manishi, yesterday I was having a conversation with Adrian Moat. He's someone who's watched these Asian markets, including India, for many, many years, right? And I asked him that question, that if investors want to diversify away from blue chip AI trade in the US, can they come to India? Will we get some money? And his view was that even after the run in, say, South Korea, some of those South Korean chip stocks are still looking reasonable. And that was news to me,
Yes.
But what's your sense? Because we are living in hope that as the world wants to diversify away from semiconductor, chip, AI, all that, we'll get some money in the new year. But will we?
Right. I think it's absolutely right. The point that you said that Adrian made, some of these, like SK Hynix or Samsung Electronics, they're still trading at single-digit P multiples. If you look at TSMC in Taiwan, the P multiple is a little higher. It's possibly in the late teens. But then earnings growth potential and the moat, the business moat that the company enjoys by virtue of being a monopoly, that is significantly stronger, and it's basically a very significant tailwind for continued interest on the part of the FIIs in these stocks. So I completely agree with that point, that despite the fact that these stocks have run up so sharply in 2025, I think there will be investor interest in those stocks in 2026. Also, remember that in this whole AI and AI enabler space, these stocks are way cheaper than their US counterparts. So if someone is concerned about monetization of AI and consequently the valuation of the core AI stocks, then these Asian champions, the Asian enablers, are one universe that he can look at.
Okay, I think I should take a coffee break to digest that. Something like an HK Hynix, despite the mega rally, is still in single digits, Rima. And
SK Hynix.
SK Hynix, as Manishi has pointed out, and all of our IT big boys, despite all the drubbing, still in the 20s.
20, 22, so yeah.
Right.
Yeah.
So Manishi, give us the big picture, right? Now going into 2026, how is your portfolio looking like, and what are the key changes that you've made in the last 1-2 months? Because, Samir Arora was making the point that don't look at India's performance, say, on a year-to-date basis. If you just look at it from October, India has actually outperformed the emerging markets, even in dollar returns. So if you look at the near-term momentum, it's in favor of India. So tell us the changes that you've made, and then looking at 2026, what's the outlook?
Okay. Right. So we have actually added to India slightly. Just about a week ago, we rebalanced our Asia ex-Japan model portfolio. We're now marginally overweight on India. So compared to about 18% benchmark weight, we have about 19.5%. We're not going overboard, but we have a marginal overweight. We're also overweight Hong Kong, China combined. We're also overweight on Korea. We have a marginal underweight on Taiwan, but we do like the Taiwanese technology universe. And, we don't really have much of a weight on the ASEAN region, some bits and pieces in Singapore and Thailand. So great. So now coming to India, there are 3 or 4 sectors where we have significant presence. The private sector banks, I've been talking about them for ages now. And I think the outperformance is just beginning to set in over there. The consumer discretionaries, autos, and various other things aligned. And that would include some of the hospital chains or the diagnostic chains, because affluence necessarily brings about more health consciousness. I would look at some of the, the conglomerates. Like I do have Reliance Industries, which is present in a multitude of, businesses and has an earnings upgrade recently, primarily because of the oil business, the oil and petrochemicals business. The sector that stands out as being absent from our portfolio is IT services, because unlike many of Asian tech companies, Indian IT services is an AI loser. I mean, their business is possibly already getting disrupted, and until and unless these companies rediscover or reinvent themselves, their core business model is going to be significantly at risk.
By the way, both the stocks, the capital goods stocks, or let's say the industrial stocks on which we had broker upgrades this morning, both are doing really well. Thermax, where a Kotak upgrade came in, is up about 3%. And L&T, where Goldman Sachs thinks that 5,000 is possible. The target price on L&T is 5,000. That's the top index winner now. 2 to 2.2% up on L&T as well. So on industrials, Manishi, what's your view? Do you own anything here? Because again, one point of debate here is that as the government's fiscal condition perhaps starts tightening up, and we've seen some dip in the GST collections as well, maybe we may not get that big booster, year-end capex spending, government spending. So just your thoughts on the industrial side of the market now and whether you'd buy anything?
Right. No, that's a good point. In fact, I sort of, forgot about it. We do have presence in industrials. I mean, there's 2 stocks that we have in our Asian model portfolio, Larsen & Toubro and Adani Ports and SEZ. The latter could also be a beneficiary if the trade deal goes through and the trade volumes pick up and so on. So broadly on industrials, I mean, we like the space because the government's focus on creation of infrastructure, we think, is likely to continue, even though we have had a short-term pivot this year in terms of supporting consumption. Second, this whole infrastructure build-out theme is not really local, but it's also global. We think that much of that global boom in infrastructure creation would have a rub-off in terms of the stocks that you mentioned, particularly the large, broad spectrum infrastructure builders. At some stage, we would also be positive on the defense stocks, because we think that Asian defense is an important theme that will have to be played in addition to European and US defense stocks. This geopolitical tensions and defense spending is likely to be a theme that'll be with us for the foreseeable time horizon.
Manishi, great chatting with you. Thank you very much for joining in. And I hope we get one more conversation in before the year closes out. Thank you once again.
Thank you very much.